Morning everybody, it's Chris here for Serene Education with the 4 majors analysis update for the 11th, Monday, 11th of July 2011. Just going to be looking at our euro against the US dollar on our CTC strategy tablet to start with. Let's have a look at the daily. You'll notice that past couple of days after the indecision, this evening star pattern setup, we've seen price revert to the downside, and it's Friday's trading range after Thursday's hesitation has seen price revert to the downside, and in doing so, trading quite close to a prior support area. All this is occurring in an uptrend, and you can see where price is at the moment now going into the Monday after the Asian session. You can see the Asian session open lower, and we're trading at the lower end of the wick of this very small range. However, the European session has opened. We're going to be going into 8 a.m. GM, the England or the UK Open, and we're trading roughly around the 1416 1700 mark, prior strong support. So ideally price needs to be staying above this in order to set another bounce. If that fails to materialize, and all we're going to see is another break lower, and then we should be looking at lower or prior lows for indication of further selling. In this case here, roughly I think 1400 is a strong support and resistance level in the past. Bit of hesitation in between, but 1400, nice round figure psychologically. We've been in the past early March through to the mid part of March, and then back again we were here yet again mid-May, and we could possibly be heading to that region again soon. CTC on a daily, we have the red arrow, red candles, but we do not have the CTC bands on the other side going red. So in terms of long-term trading, we're still hesitant on this pair. If you're trading intraday, then yes, you'd probably be in this trade long-term setup. However, going into today or the beginning of this week, looking at price trading thereabouts near a prior support area. Price will need to break through that in order to give us a clear indication that we're looking at 1400 as our next possible target. So until we see a break lower than at least the 1700, ideally a break lower than that on the 30 minutes or an hourly chart would definitely give us further setups for intraday lows. So on to the sterling against US dollar. Let's have a look at the daily time frame. Here again, this particular pair has broken through a major trend line upside recently in the past couple of weeks, and we've seen price revert to the downside after a pullback and retest of that underside of that major trend and a continuation to the downside. If you look at where price is trading in conjunction with the intermediate trend at the moment now, you can see that price pulled back on Friday, back to this trend line, failed to break, well, it closed higher than the 200 period institution moving average, but it came into play with the downtrend, and what's happened is you've seen price now trading lower end of the candle wick. So we've seen price fail to materialize to the upside, fail to break higher than the previous support and resistance level. You'll notice here, if I just zoom out, you notice that on a couple of occasions in the past we had a strong support area, almost a full week of support back in mid-May, and then almost 3 to 4 days of support yet again in late June before we see the break to the downside. And what's happened is prices pulled back to the underside, failed to materialize over here. You can see a lot of movement to the upside, hesitation as we went to this support area, price support and resistance, indecision candle, a spinning top, and then a decision, and then we've broken down. But however, Friday we saw the sterling rally against the US dollar. That was on negative news that came out on non-farm payroll for stateside. However, that was short-lived, because what's happened now is you can see that price in this trend, because we had lower swings that's dictating this, and you can see that Asian market open and the European session open this morning, we've seen very indecisive and trading much lower than the close on Friday. So where to for this price? Well, we know that 1600 long term, if I can find it here amongst all this, is a very strong support and resistance level long term. Now I mean long term because if I zoom out here, you can see the red line, a lot of prior resistance and support along this level. So psychologically, if price is still trading above that, then obviously we're still looking bullish, even though we are CTC wise looking red now for further shorting opportunities, and we're going to a squeeze pattern. But 1600 is what the psychologically, a lot of traders will be looking as a strong support area. So as long as they're holding on to 1600, there's a possibility of upside movement. If and when we get a nice bearish engulfing candle to the downside, clearing well away from this, then it'll give us an indication that psychologically people who are long in this have given up the ghost and are looking, 1600 is past and done, and you could look at overall the next strong support and resistance level on the previously on this upside would be roughly at 15,3500. So bearish candle to the downside today or this week would definitely confirm that we are still very much looking at a new trend direction. This is bearish at the moment now, and sentiment wise we're looking at long term at 15,3500 is our next long term support and resistance area. However, in between there and then we got one at 15,800. There's another slight pause here, just under the 15,600 mark. Ultimately, this is going to be our next big baby because, as I mentioned, like the 1600, a lot of support and resistance in that area. Here, we had a couple of weeks again in mid or late December, early January. We had another strong support in that area. So, failure to find support here at 1600, break low and close low in a bearish candle. Got to see a bearish sentiment creeping in to give us that indication of a push, the momentum drive on a daily chart to give us that intraday movement lower. Next up is the US dollar against Swiss franc. Let's look at the daily time frame. Here again on Friday, we saw the US dollar rally early first thing morning, and then going into the US session, we had the negative non-farm payroll NFP figures that came out mid-afternoon, and that just dragged everything south again, south of the border. You can still see the major trend is still negative, and that negativity or that trend line or that the bearishness we saw on Friday coincides with the actual major trend. As you can see that the actual ceiling level for this trend has been tested. So if I just draw my line properly, there we go. You can see the momentum sapped from this and still sitting on the underside of this. So the US dollar as we speak now is still in a negative downtrend for this pair, and the most likely target would be roughly, if anything, the bottom end at 830 psychologically. We've had price support here, so we're going to consolidation range. You can see that consolidation range is quite unique. You can see almost since early June we've been in this consolidation range, ranging between these 2 points here. So any between 835 or 830 would be ideally our next target. A lot of more action happening at the bottom of the wicks. A lot of wicks at the top of it showing that market sentiment is still looking bearish, and the CTC in this case is still selling to the downside. So it's likely that we're going to have more psychological advancement for US lower, even though we've seen a lot of momentum, bullish momentum in the market over the past number of weeks. I think it's 3 or 4 months now we've had consecutive good data coming out of the US. However, it just goes to show that even that we are still making slight headway against this major negativity, there's still, however, a grip, and non-farm payroll and unemployment figures really dealt us that blow, showing us that the market is not really moving as quickly as everybody thought it was, and the unemployment figures are still quite high. So that is going to psychologically on everybody's trading minds trading is going to obviously be a direct influence of where price is occurring now, and you can see that a lot more price action at the bottom of the candles, confirming that there's still negativity or indecision in the parts of the traders out there, long-term traders, and that's forcing us to play lower. So ideally intraday, look at 835 or 830 is our next possible target because we've been in the past. We don't have a red arrow, which would be our next port of call. We get the red arrow, and then we're still looking for shorts to the downside. So intraday, slight hesitation as we head towards 835, a very small trading range, but that will become more apparent this week. Just have a look at what news events we have this week coming out. Today, not much really happening on US session wise. A lot of stuff on Canada, but that's about it. Last pair of the day is US dollar against Japanese yen. Let's have a look at the daily time frame. You notice that this pair has been in a consolidation range for a number of months, only 6 months now. You can see, however, that the highs are getting lower. We're being squeezed between 2 points now in this negative downtrend. Intervention early April didn't stack up. That failed to materialize, and we've seen a punch back down to the underside, and we're still trading in a negative trend. CTC is well extended red. Bar a couple of days we've seen bullishness, but that bullishness hasn't coincided with prior breaks of major price support and resistance levels, which have come up to nothing. However, notice that the US dollar has gained a lot of strength recently to the upside. Non-farm payroll brought it back to its knees again, and you can see this candle here on Friday engulfed literally 4 weeks worth of positiveness to the upside. That negative candle brought us back to trading under the 2 moving averages again, and Asian market trading this morning has seen price reverting slightly higher. US dollar finding a bit of strength against the Japanese yen. This coincides with the break lower and the consolidation. If price is unable to break higher than that consolidation range, you notice a price support here. There we go, a little hesitation support. If it fails to break higher and trade higher than at least the 80.75 or 80.80 going into the remainder of this week, then obviously what we're seeing is this bearish engulfing here. Just engulfs the entire range over here. If I just take that and mirror it, you can see that all this upside movement here has become null and void unless price can actually move higher. Failure to do so, this bearish candle here has done damage and really knocked out all this momentum to the upside. And we know what the Japanese yen's like trading recently is quite skittish. So if we don't see the US dollar rallying and reattempting highs, then what we're going to see is price reverting to the downside, and we could look at ultimately the 80 mark being our first target, because we've been in the past on a number of occasions. So ultimately 80 is going to be our major long-term target. There'll probably be more likely be consolidation to the downside on a way there. We can see there's a price support area here just above the 80.55 mark, where price attempted Asian market session last night, and we've seen it bounce higher. So ideally long term, a failure to actually push higher than 80 or close lower than 80.55 would definitely confirm that we're seeing another bearish sentiment, bearish setup, and we could be looking at 80 long term as our next potential target. So intraday, guys, you see the 20 and 50 trading above us, 30 to trade above that range and above the intermediate uptrend. In this case, there we go, this line here, because you can see we had higher swings on the way. It's now breaking lower than that. It fails to punch higher and trade higher than 80. In this case here, anything above 81.10, 81.20 going into this end of this week, then we should be looking at price failing to break higher than here, and then looking for further downside movement on the US dollar against the yen pair. That's it for today, guys. Hope you have a fantastic trading day. Have a great start to the week. Remember, if you're using the CTC strategy as your setup, please ensure that you follow the rules of the CTC. Please ensure that you follow or back that up with great money management rules. And most importantly, keep it simple. Okay? And enjoy your trading. Trade serenely.